and welcome to the Better Money Habits podcast. My name is Terryanne Chebet, and I will be speaking to Annestella Mumbi, the Country Growth Manager at Tala, and our topic for today is borrowing digitally. Now, while digital credit providers have tremendously increased access to credit for the underbanked and underserved majority in Kenya over the past 10 years, many of us are yet to truly understand how best to utilize the power of access to thousands of shillings at the press of a button on our mobile phones, and what entails the back-end data that is shared before the loans are disbursed to us. So in today's episode, we'll be talking about the best practices while borrowing digitally. Mumbi, thank you so much for joining us. I'm a user of mobile, credit, and many Kenyans are today. And for the first time, we were actually able to get even more than a bank could give us on our mobile phone without filling forms and all that. Tell us, what is it that has driven mobile credit over the last few years?
Yeah, thank you, TC, and I'm glad to hear you're a customer. If you look back at, let's say, 2013, 2014, when Tala was coming into the market, together with other different types of lenders, those are a big problem. So let's start with some data. I like to give data. So at the time, let's say about 30% of men and about just a little over 20% of women had access to bank accounts. So that's just that piece. Then let's move to credit. If you look at credit, it was just about 3% of just the general population that had access to personal loans from banks, and about 6% had access to MFIs and SACCO loans. So this is data from the FinAccess report of 2013. So it starts to show the challenge that existed in the market, because a lot of people didn't have access to credit, and just let me call it more formal credit, because people were still borrowing. So where was this happening? It was happening from family and friends. It was happening from your shopkeeper, and so on. So that's why a lot of the activity was ongoing. But that introduced some challenges, because one, that was not completely accessible. It was very dependent on people being able to give you the credit. Second, it was very trust-based, which is not a bad thing. But if you couldn't find someone who could trust you or knew you, then you were unable to get credit. So let's fast forward to the flip side of what was happening in the Kenya market and how a company like Tala came to be. So at the time, our founder, Shivani Siroya, was working with the United Nations Development Fund. So what was interesting at the time was they were trying to understand the impact of microfinance institutions within different emerging markets. So think of it as India and sub-Saharan Africa. And what they found was, despite MFIs having the heart in the right place, so to speak, access to credit was still not advancing. So what was the issue there? And interestingly, the issue was data. So how are you able to underwrite and increase confidence in your ability to offer credit as a lender? And since if you look at the data I gave, a lot of people don't have formal credit history. So then how are you able to determine that? So as an experiment, she started lending to people from her own savings. And what she was using as an experiment to underwrite was their social networks. So she would look at, how are you socially, and then pick some variable factors and use that as a decision maker for whether to give you credit or not. And that is how Tala came to be. So it was more about, how can we identify what we're calling alternative data sources to determine if we can give you credit. Because a lot of people had been left out of the formal financial economy. If you think about the numbers I gave, it was about 10% of the population, give or take. So how could we identify, for example, TC, has a very strong relationship with the family, right? Has borrowed and paid within the family, uses M-Pesa in this type of way, and be able to say, okay, we feel confident about being able to actually give you credit. And yeah, Tala was the pioneer in the market in 2014. And if you look at the numbers moving, forward, there has been tremendous increase in access to credit across the board. Yeah.
You've mentioned the data, and I got curious a little bit, because the first time I applied for a Tala loan, I was looking for containers for my skincare business, and I didn't have a certain amount of cash that I needed to top up. So somebody said, why don't you try Tala? And when I tried, my limit was 30,000 bob. And I'm like, what? Just like that? And in like a minute, I actually had, I had the cash and I topped up. And that became my actual source of income for the business going forward. When I needed to top up something, as long as I paid within my, my time. So what kind of data, do you use to determine how much somebody can get?
Yeah. No, that's such a powerful story. And one thing I'll point out is actually we're seeing 60% of our customers, and the number is actually going higher as of the last Money Match report we just released 2 days ago. I think now it's about 80% people who are actually borrowing for business needs. So whether they're actually fully working their business or they're employed and have a side hustle, actually seeing a lot of borrowing for business needs. So it's great to hear that. So if you think back to the data. What I was referring to as a formal financial history is, what banks will look at. So they'll look at, for example, a credit bureau and see what has been your borrowing behavior there. And a lot of that data was being fed from, MFIs and banks and so on. So for us, it was more of away from that because a lot of people have not had access to those types of loans. What other sources of alternative data can we use? So it's quite interesting. We do everything from psychometric data to data from your phone. A good example I like to give is social contacts. We notice that people who have strong family and friend ties and are having those types of conversations tend to actually, pay, be more diligent in terms of repayment. Psychometric just means, through the application you take, there are quite a number of data points that we look at. So long story short is we look at thousands and thousands of micro pieces of data. And that becomes the power of tech, in my opinion, because through tech and machine learning, we're able to actually take in big pieces of data, determine trends around, repayment and how to build confidence that are not tied to what I'd call like your more formal financial history, though we still look at that. And then we're able to actually bring in a lot of people into the formal financial economy in that sense. Yeah.
You've talked about, majority of people actually borrowing for business, which I think is, which is great. But sometimes I know we just borrow because we can. I need a new wig, new weave, color my hair. And then, I'm onto my phone. So what are some of the things that we must consider, when looking to get a digital loan?
Yeah, and that is true. Although we talk about the business piece, we have a lot of people who are borrowing to close what we call income gaps. So you're getting paid on the 31st. There's something you need to do on the 20th, so you borrow for that reason. Have a lot of people borrowing for school fees and a lot of other needs. So that is true. What we say and what we tell our customers is, one, borrow only if you understand how you're going to be able to repay. And that becomes very key because, depending on the use case that you're borrowing for, you're able to look at the offer that you're getting from a lender and determine, does this make sense for me? If I'm being charged, 15% or 20% interest, and I'm putting this in my business, how much interest am I going to make from whatever I'm selling? Does that make sense for the amount that I'm borrowing at? And the advantages that a lot of Kenyans have right now is a lot of options. So find a lender that works for you. And that's forced us as a company to also learn how to become very flexible in the types of offers we give. So most recently, we just launched a product called CDD, or custom due date, where customers can actually select a due date that works for them. So in the past, people, you had a term loan. It's 30 days, come rain, come sunshine, you have to pay. Right now, it's, your salary is coming in on the 31st. Then you just, take the cash and you drag it to the date that you actually know you're getting your payment. Yeah, and that for us, we see it as like an initial step towards what we call putting the choice and control in the customer's hands. So, moving into the rest of the year, we're expecting to see a lot more flexibility when it comes to interest rates, when it comes to, of course, how you choose your due date and so forth, because we just want to continuously give customers options that work for them, because use cases for loans are very different. So we want to be able to innovate as a company. So so back to your question, definitely make sure you have a good understanding of how your ability to be able to repay, because you want to be able to maintain a good relationship with your lender. And number two, it's something we always say, avoid taking a loan to repay a loan if you're able to. It's just part of being able to have healthy financial habits. But we understand that, emergencies come and things happen. So find a lender that understands you. For example, with Tala, if you're unable to pay within, the time that you stated, you can actually call us and we can make a payment plan with you. Because our goal is, how do we keep you within our ecosystem? And we understand that, life is hard. Things happen. You do have the right intentions, but sometimes things do happen.
You've said that, and I recall a story I think I read on Twitter, somebody talking about digital, getting into digital lending and not doing it properly, or something happened at work and they were unable to get their income back on track. So it was borrowing from one app to another to pay off. So you're basically just, getting into an abyss of debt. Tell us, what are the times when you should absolutely not take a digital loan?
That
and I know
hard.
you're Tala, so maybe, but I mean, it's important. Sometimes you shouldn't, right?
Yeah. So when I think about that question, I think about it less as a use case. So I cannot really say don't take a loan when you're having a health emergency or when you're having, a school fees emergency, because emergencies are emergencies, and that's the power of credit. It helps to close income gaps, helps you when you're having some type of income shock, which is an emergency. However, I'll just repeat what I said earlier. If you do not see a clear path towards how you're able to repay, then avoid loans. Avoid, loans, especially in such situations, because you want to be able to maintain a good relationship with your lender. And number two, you just want to maintain a good track record as a borrower. So I use that as like a proxy in my mind. In terms of when I'd say do not borrow. So just, at least even if you have an idea of when you might be able to repay, then that's fine. But if you absolutely do not know how you'd be able to repay, then I'd say try maybe some additional flexible options so that you're not dealing with the stress of, owning a formal financial lender some money. Yep.
Tell us, when it comes to young people, and I know, as you get older, as you get to interact with credit, whether from a bank or otherwise, somehow you get a lot more information on how to manage your credit. But for a young person who's, let's say, in uni or in college just after high school, as long as they're above 18, I'm sure they can access some form of credit. What kind of advice would you usually give somebody? Maybe one who has never gotten any, but is in the space where they're thinking, maybe now I could. So what kind of advice would you give them?
Yeah, I'd say education is key. Educate yourself. One of the most beautiful things that has started to happen is responsible lenders such as Tala and other members of the DLAC Association, which is the Digital Lenders Association of Kenya, have started putting out a lot of information around best practices around just healthy borrowing and healthy lending. And it's very important for you to inform yourself. So, when you feel the need and see the need to start borrowing, then identify, Google DLAC and identify, okay, who are the lenders who are sitting under that umbrella? Because number one, that puts you in a place where you're dealing with what I'd call, safe lenders who are working within, a certain set of guidelines around how to just operate, how to ensure consumers are safe. Then number two, look at the lender that you're considering. Look at the offer that they're giving you. So go within the app, complete the application. And in most instances, the lender will tell you, hey, we're able to give you 10,000 at, 7% or 10% interest. Do you want to take the loan? Compare and see where you're getting the best offer. Another, source of information I'd say is company websites. A lot of information exists there within the FAQs and so on. Look through the website. So I think what I'm communicating is to be key is educate yourself. Coming back, specifically to Tala, look at our our social media pages. We actually have a lot of content. They're just around healthy borrowing practices. We have multiple blogs that have been published. Also within our app, we actually have a lunch center that has a lot of content. So just spend a bit of time understanding what you're getting into, so that by the time you're taking the loan, you're actually an informed consumer, and that becomes very key. Yeah.
Wow, thank you so much. Is there anything else you might want to add?
Nothing else. I'd say, just continue to educate yourself, which is the last point I made. It becomes very key to understand how financial providers are evolving, not just with lending, but across the board. A lot of, fintech companies are coming up that are, democratizing access to saving, access to investing, access to borrowing and lending. So, be very keen and look within the market to see, the people who are giving you the best offers, and, always educate yourself. Yeah, to repeat.
Thank you so much, Mumbi. It's been such a pleasure to speak with you today. And as you say, education, 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 that helps us a long way in making sure that we are better borrowers, because there's so much of access currently to digital credit. This is the Better Money Habits podcast, and I'm your host, Terryanne Chebet. This podcast is powered by Tala. Until next time, kwaheri.